Let's settle this debate once and for all. Have you seen or heard those people claiming with confidence that money market funds are not real investments? Like they're just savings accounts or you're not really investing? Well, I'm here to set the record straight because those people are 100% wrong. They might not be as flashy as the stock market or the cryptocurrency, but that doesn't disqualify them at all. In fact, if you've ever put cash, any cash in one, you've been an investor this whole time, Bana. You just didn't realize it. So today, we are breaking down exactly what makes an investment, how money market funds check every box in these features, and why dismissing them as not real is actually a huge misunderstanding or misinformation. By the end of this video, you'll see why even the safest investments can still count as investment and how the money market funds fits into your financial portfolio. So let's get into it. My name is Otachi. Press that subscribe button. So what actually makes something an investment? Because once you understand the key ingredients of an investment, then this debate will end right here. So number one, an investment requires you to commit capital with the expectation of earning a return. You hear that? When you put your money into a money market fund, you are not just stuffing your money under a mattress. No, you are pooling it with other investors to buy short-term like treasury bills, corporate bonds, or fixed deposit and the stuff. The fund then pays you an interest in return. That's not a savings account, that's investing. Number two, investments generate income. So for instance, stocks zina pay dividends, bonds pay you an interest, and money market funds, they pay you a yield, an interest, a return higher than your bank's savings account rate. Even if the returns are kidogo modest, they are still returns. That's your money making what? Making more money for you. Third, all investments sit somewhere on the risk spectrum. Sawa sawa. So just because money market funds are on this safest side, and that does not mean that they are risk-free. There's still some level of risk. But compare that to Kitukama stocks, where you could lose like 20% in a single day, or the cryptocurrency, where something could just go haywire in 1 minute. And now when you come to the money market funds, they are a little bit conservative, but that does not make them an investment. Finally, there's the liquidity question in investments. Investments are not just supposed to be long-term locks of your money. The money market funds can let you cash out your money anytime, just like a savings account, but it gives you better growth. That flexibility reinforces their role as what? A short-term investment. So let's stop pretending. Money market funds are not just fancy savings accounts, so you fancy piggy banks. They meet every definition of an investment. They are just designed for safety and liquidity. This is why I always ask, what goal is driving you? The answer to this question determines your particular choice of investment. So now that we have established that money market funds are absolutely investments, let's tackle why so many people get these wrong all the time. Like, what are some of the myths that people use? Because honestly, the confusion makes sense when you look at these myths and where they come from. So myth number one, money market funds are just like cash. Yani ni kama pesa yenye iko tu kwa M-Pesa yenye you can withdraw at any given point. I get it. They feel like it's liquid cash and you can withdraw it anytime, just like M-Pesa or your bank account. But here is the key difference. Cash under your mattress earns you zero. Cash in your M-Pesa or bank account also earns you basically zero. What about the money market funds? The money that you've deposited there, they are actually growing your money through interest payments, and it keeps changing every other day. That's the whole point of investing, all right? Myth number two, if there is no risk, it's not an investment. That is what they say. First off, no such thing as zero risk when it comes, as we've already pointed out. So Even the money market funds, they do carry some level of risk, just that that risk is very little. But more importantly, since when did risk become the only requirement for investing? And if it is not risky, then it is not an investment. Treasury bills are investments. Treasury bonds are investments. All these have relatively lower risk. Risk level doesn't determine whether something is an investment or not. It only determines what kind of investment it is, which is either low risk investment or high risk investment. Then there is myth number 3. Real investing means you are doing stocks or real estate. Please, this is like saying the only real exercise is running marathon. What about yoga? What about doing weight training? Or the only stable food is ugali just because you come from Western? Investment comes in all shapes and sizes for different purposes. Money market funds are like the yoga of investing, yeah? Lower intensity, you know, like those moves, but still absolutely counts as exercise. The truth is, you see, when you're calling money market funds like not real investment because unauza mashamba ama sijui you're selling something else, that is like financial gatekeeping. It's like saying a Toyota Corolla is not a real car because it's not a Ferrari or it's not a Lambo. You get it? Sindio? Different vehicles are meant for different journeys or purposes. Such applies to investments as well. The misconception matters and should be discouraged because it misleads people to either avoid money market funds unnecessarily, therefore they are missing out on safe returns, or they could be like pushed or moved to take inappropriate risk because they think that if I'm not in the stocks or in the real estates, then I'm not investing. And you see, both these two are bad outcomes. Understanding that money market funds are legitimate investments, just that ziko safe and conservative, helps you make smarter decisions when it comes to your cash. So now let's quickly talk about where the money market funds really earn their place in your financial game plan. Ya kwanza, money market funds can be used as your emergency fund accounts. You know you are supposed to have at least 3 to 6 months of expenses set aside, right? But letting that cash rot in a bank account, earning you 0.1, 2% is leaving money on the table. A money market funds inakupatia that same instant access when disaster imekustrike. But your money actually grows while it waits. And that's not just smart, it's responsible investing. Then these money market funds can be used for your short-term savings goals. Savings for an asset, a wedding, a big vacation next year. These money market funds are the perfect spot that you can park that money. Unlike stocks, where you could lose value or your money goes evil, crypto, rates. Money market funds preserve your principal while still giving you better returns than a savings account. And during market downturns, like sasa zile mambo imechemka, when the stock markets become scary, when the crypto is not working, even seasoned investors do get some woga here and there. Money market funds become the calm in the storm, a place that you can temporarily park your money without exiting the market completely. It's not market timing, it's just smart risk management. And finally, the conservative investor, I'm the one who doesn't like playing games with their money. You know, you are watching me wengine pale nje. Money market fund is your best friend. Retirees living off savings, young parents saving for college, or anyone who just can't afford big risks. Money market funds provide you stability without sacrificing all that growth. They are the financial equivalent of a steady and reliable what? Partner. Okay? Here is the bottom line. Money market funds are not about getting rich quick. Iyo nayo sahau. Yes, they are positive consistency in a bit many options over the long run, but understanding why you are getting into an investment or the goal that drives you to start investing should be the guiding factor in deciding which investment vehicle you are going to take. And that's not just investing. That's investing wisely. See you in the next video.